Hello, Level Up community. It's me again, Kisha, and I'm here to discuss another video on ISO's exercise. Let me share my screen first. Oh. So hello again, client. After this meeting, you will be able to understand more when you exercise and sell your ISOs and IPO on the same day, and given that the initial assumption that strike price is less than the fair market value. So example, you have 100,000 shares and the strike price or the grant price is at $2 per share. And then you have decided to exercise or buy and sell it on the same day, given that the fair market value is the same with your strike price, $2, and your selling price is $40 per share. So these are the questions that may arise during the transaction. What is the total basis? What is the total proceeds? What is the ordinary income upon exercise or selling? Is there an AFT? Are there any taxes owed? Is there a need for basis adjustment? How to report? And why is it in W2? How is it showed in Form 1099B? For any adjustments on Schedule D, how is it shown? And how do you reflect it in W2? So let's dive into it. So for the calculations, the total basis of this transaction is equal to 200,000. That is from $2 strike price multiplied by 100,000 shares. The total proceeds would be the fair market value upon selling, that is $40 per share, multiplied by 100,000 shares, that is $4 million. So is there an ordinary income upon exercise or selling? Yes, there is, but given only that these specific conditions are met. Number one, the ISO is an initial public offering. Number two, you bought and you sold those ISOs on the same day. And number three, if the strike price is less than the fair market value. So as long as these three conditions are met, then only ordinary income is considered and there is no AFT. So the ordinary income arises from the capital gain when you exercise and sold your ISO. So the computation of that will be $40 per share less than strike price of $2 per share. That will be 38,000 gain. $38 share multiplied by 100,000 shares. That will give you $3.8 million reported as ordinary income as part of the W2. Why is it part of the W2 again? Because ISO is an incentive stock options that gives you, the owner or the holder of the ISOs, to exercise it, that is given by your company as incentives. So it will form part of your W2. Number two, on the taxes, are there any taxes owed? Yes, there is taxes owed, but it will be based upon your ordinary income. And it will be taxed together with your W2 income as it forms part of your employment income. For basis adjustment on Schedule D, these are the basis adjustment to reflect your W2 portion on your Schedule D. If you were to ask why is it involved in Schedule D, as you exercise and sold your stock, you have made a disposition transaction, so that normally will flow into the Schedule D. But since it is part of an ordinary income and reported as W2, it will be shown as an adjustment on Schedule D. So on the reporting, it will be reported in W2 in box 14, specifically as line ISO. And it is showed in 1099B with the proceeds of $4 million and a basis of 200,000. However, on the Schedule D, on Form 8949, the proceeds and the basis are shown together with the amount of adjustment of 3.8 million. So again, the 3.8 million is derived from $40 per share selling price less $2 per share stock basis is equal to $38 gain multiplied by 100,000 shares. So again, it will be reflected on the W2 portion, box 14, as ISO income. So when exercising and selling on the same day, you actually don't need to have upfront money, unlike when you exercise ISOs and you don't buy and sell it on the same day. You have to have enough cash to pay for the payment of buying your shares, and you also have to have cash to pay for the AMT. So it's different on this specific transaction. And again, the difference of the fair market value and the strike price is considered as a capital gain or ordinary income and will form part of the W2 income. So on the taxation, W2 income it will be taxable and taxed as the same as how we tax W2 income or employment income. And since there is no AMT to report, there is no need to track AMT basis nor AMT credit. So for tax strategies, but since the exercise and selling of ISOs on the same day doesn't have automatic withholding, so it's best that we do tax planning and we pay estimated tax payments just enough to avoid underpayment penalties. because I would highly suggest to pay estimated tax payments, as it is the most underrated tax strategies. Sorry for that. So proper reporting of the gain as part of W2 income avoids double taxation or paying twice on the same income. So finally, on the filing and reporting, it will show on Form W2 as part of your employment income, and the basis adjustment will form part of the Form 8949 or the Schedule E. And in the Form 1099B, it will show the ISO stock sales with the original stock basis or the grant price. So finally, it is best to exercise your ISO between January 1st to March 31st, because on this period, on the first quarter of the year, it gives you time to sell and pay taxes in April on the following year, where you can sell it on long-term capital gains. And consequently, the first time to exercise ISOs are between the months of September to December, which is leading to the year end, and it is near the April 14 filing of taxes, and you won't have enough time to figure things out. So exercise and hold within this months can be more possibly lead to pay AMT, which is due on April, and the worst will be paying ordinary income tax. So I hope you have learned something from this discussion. And if you have any questions, please do not hesitate to send us a message, and we will be happy to answer your inquiries. So thank you so much for your time. And Level Up Community, that's it. I hope I have imparted my learnings on this specific topic, and see you on the next courses. Let's go, Level Up.